Alrighty, so I had a small green day on Friday, so we're going to break down that trade real quick. All right, so we're going to start with the Discord chat in this analysis section where I first posted it. So you see, I said, so first on the list is AUDCHF. Daily market structure 100% bearish and has pushed up into that 4-hour bearish order block, sweep that 4-hour buy side liquidity, and was followed up by a lower time frame shift lower. Okay, so there's that shift, and we're going to go to the chart now just so you can see that. There was our order block. There was our liquidity grab these highs right here, and now it's moving lower. So ADCHF, first things first, with my personal strategy, we have to make sure that it's operating, because this was a short play. This is a short play, so that means I need to make sure that the market structure is operating 100% within a bearish market structure. We broke this swing low. That was our original shift. We had this big leg lower. Then we put in a swing high. The swing point was formed. Third candle closes. Boom, it's confirmed at that point. It is operating 100% within a bearish market structure. So the daily chart, and it still is operating 100% within a bearish market structure. So that's all I need to do on the daily. Just ensure that I'm trading with that predominant trend. And the 4-hour chart is where we had our higher time frame level of resistance. So you can see right here, we have what's called a bearish order block. There's our bearish order block. See that? See that up close candle right there? And then we have our fair value gap confirmation, or we had our fair value gap in there as well. And then we have this right here, which is our buy side liquidity, because we know above swing high levels like this, highest high in the middle, two lower highs in the left and the right, swing high in the middle, two lower highs in the left and the right, we have buy stops resting above these swing high levels. What does price do? It comes up, it takes these upper buy stops, it tests that higher time frame level of resistance, aka the order block, and it rebalances another large portion of that 4-hour price action, that imbalance. And then after doing so, because we've established we're trading with a predominant trend, we established we're trading up into a higher time frame level of resistance, taking liquidity. The next thing that we saw that we want to see is lower time frame confirmation. Did we get it? Let's go to the 1-hour chart. We sure did. So it's not a very big fair value gap, but look at this right here. That is a fair value gap, and it did break that swing low level to the left of it. See that? Lowest low in the middle, two higher lows on the left and the right. We broke that swing low level. That represents a shift in market structure. Then what does price do next? It pulls back within that range, puts in a swing high, and then it continues to trend lower. So it's operating within a 100% within a bearish market structure. All right, at that point it was. Now, I didn't take this trade higher up into that first displacement. It was outside of my kill zone. So as per my rules, I cannot take that trade. But that was where the first shift happened. It would have been much better if this happened during London session, and then we had that pull back into our kill zone, but that didn't happen. All right, so then what ended up happening was we had this big displacement here. Look at my cursor during London session. We had a big displacement. We had fair value gap confirmation, and it's still reacting off of that higher time frame resistance. So we have this displacement as well. That's my confirmation. And then coming into New York kill zone on Friday, we had this retracement within the range. So what do? Drag our Fibonacci from the high to the low. Anything above 50% equilibrium is considered expensive within that price range. And I ended up getting in this play as soon as we tapped up into this bearish fair value gap right here. See this in a premium marketplace. Now my stop on it was actually this high up here. And as I told my mentees, the reason why is because this was the best place to keep your stop, because it was the original liquidity grab. It was the original test of that higher time frame level. It was the original reaction right here. This was basically just a continuation move, but this was the original shift. And that's always going to be the best place to keep your stop, is that original shift, that first reaction. That was the first reaction. So therefore, that was the best place to keep your stop. But also this AUDCHF, it's not the biggest mover. So you gotta think about, the spread as well. This was about 11. This would have been about 11 pip stop loss, which is doable, but it's still a little bit tight for my liking. And I figured with this not being the original shift, with this not being the original, or really there's no liquidity grab right there in the 1 hour. There's no liquidity grab right there. I figured there's a good chance that this could be used as a stop run before we head lower. And what do you know? That's exactly what happened. It came up. It didn't completely take out the high, but if you had your order right there, the spread would have got you. You would have got taken out. And as you can see, after doing so, after taking those stops, it moved lower because that was just a stop run. That's why I like keeping my stop right here, because if I kept my stop right here and it ripped up, I can comfortably say that my thesis was wrong on the play if it broke above this high right here, above that major liquidity grab. But right here, that was just a stop run. After taking those stops, it ended up selling off and ended up taking this low of day sell side right here. So this is actually where I ended up taking profits on the play when we came down and we sweep this low right here. And my profit target was this though. So ways away from my profit target, because as I said, it was a small green day. So this was my profit target. This was my stop. And you might be thinking, okay, well, why'd you bail early? Did you not break your rules? I didn't break my rules. It was coming into New York close or coming into the weekend. I don't want to hold into the weekend. I did figure this was going to be kind of a stretch to hit this point, but I decided to take my chance with it, and it just didn't get going enough. And this happened like, there was like an hour left until close. So, kind of using some common sense here. And it's an hour until the close. We got a lot of green we'd have to cover to hit that PT. We're taking out low of day, which is a major liquidity pool. What are the odds that this is gonna, just start selling off? Extremely powerful, and especially considering that we're entering, a lower volume time. It's not likely. So using common sense, take profits at that liquidity pool and don't mess with the weekend. Or at least I don't like to mess with the weekend. A lot can happen over the weekend. You can gap up in the opposing direction on you, and that stop won't save you at that point. So you gotta be careful with that. But yeah, I like to play. It was a solid play, solid setup, had everything I wanted. So I'll scratch that off as a successful trade.